What's happening, guys? I hope everybody had a fantastic weekend. We've got another Sunday scan coming at you for the 24th of October. Lots of birthdays this week. My sister's birthday is today, so happy birthday. And my wife's birthday is on Thursday. October flew by. Next Monday is the last day of the month, and we're already into November, December, and it's the new year. So, I always try to talk about this. I talked about it mid-year, whether or not you had done, your New Year's resolutions and all that, stuff. Now you need to start thinking about, if you do need that milestone, that date, that, reset moment. If that's the end of the year for you, if that's when you're going to start to do things, you might as well start to get the ball rolling on those types of changes, because they're not going to just happen like that. And if you start today, at least by January 1st, you can be ready to roll, and you don't have to kind of warm up into a new routine. It'll already be routine for the year ahead. So last week, big week, one of my better ones of the last, couple months anyway. We've had two, three, maybe 4 weeks of sort of sideways kind of action, some good stuff, some crappy stuff. But for me, I wasn't performing as well as I could have been. And it wasn't because of a lack of plays. We've talked about this every single time. It was my inability to not necessarily adapt. I knew what I needed to do, but actually doing it. So finding the trades, getting on the right side was no problem. I found them every single day. But had I covered at 9:45, 10 a.m. every single day and just, left the day, I wouldn't have been in a much better position. Instead, you try to let things work and end up minimizing. So that's the same thing I've said every week for the last 3-4 weeks. So I'm not going to get into that again. However, this week, patience worked. So, with a couple of the changes that I had made, meaning, covering the majority, I was rescaling in after they confirmed that they were staying weak. And that's really the biggest change that I've made. Adapting to this current market situation, finding those trades. We're in a market where, it's earnings right now. So sometimes things gap down. And I figure that, you saw Snap and Netflix, some pretty big moves, and they kind of just stay, steady one way or in this case, Netflix came up nicely. And then there's something like AA. And this was a pretty big mover, but it was gapping down. And, it's just something that I feel like it's necessary to just discuss, because I saw a lot of people still, trying to force that trade. Like, why is it going up? It should be going down. It was just down here. Now it's up here. And, what is it doing? When you look at the daily, it's really not up that much. And the point that I want to make today on Scan is just, kind of understanding how price makes us view things a little bit differently, right? So in the case of AA, it was $33 pre-market. So when it rallies up from down $3, $4, $5 per share to nearing red to green on the day, all of a sudden we're thinking, 37 seems like a potential good short, because it was just 33. So blows off, sits back, and then it starts to consolidate. In this case, it went to, I think, 39 and change, and it came back, and we talked about 38.80s. And, I reminded like 3 or 4 times, because I just saw it, coming back, and it was just basing there. Just because price has convinced you that this is now a high price does not mean that it is, right? So had it opened at 42 and pulled back, we wouldn't be so, convinced that it was a short. But because it opened at 33 early pre-market and it rallied back, now we think that this price is high, right? So just be cautious if you fall into that trap of, thinking that something is priced incorrectly just because of where it was earlier in the, in the morning or where after hours, things like that. Because that's typically low volume, low liquidity, and really what matters is what happens after the bell. Right? After 9:30, 9:45, 10 a.m. plus. Respect whatever trend it wants to take, especially on earnings movers, because you can nail the front side and it unwinds perfectly, and then it finds its base and it just does this slow, steady grind to keep you in, and you give it all back and then some. So AA was like the first one of that type in this current cycle of earnings season, and I just wanted to make sure you guys be aware of that. I will go over a couple other trades from this week once I switch over to the once I record my screen. But other than that, I wanted to talk about the earnings plays, mispricing, and just general mindset on that particular setup. So, a short video this week. Pretty much everything we've been talking about is still in play. Every day last week was pretty straightforward. I encourage everybody to make sure that you're logging into the broadcast 8:50 a.m. every single morning. Because that's where I go over everything that I'm looking to trade, whether it's the main watches or the ones that I'm setting price alerts for later that I want to quietly be part of. You never like a crowded trade. You see what happens when something like ILAG, when everybody's doing the same exact thing, right? So for me, I like to identify potentials that I think will maybe push and then slowly fade throughout the day. But that's it. That's my prep. And if you see the trade, great. If not, then you end up missing it. But those are ones that I like to quietly lean on because the more that are doing it, obviously, when they stop going in that direction, they're going to go the opposite way quicker. So that's why you never see me really alert the lower volume or the highly crowded trades because it's just not worth it. It's not worth adding that additional risk to a trade that's already potentially crowded. So anyway, let's get right into it. Like I said, I want to go over couple setups anyway, and then we'll get right into scan. All right, guys. So for the second part of scan, before I get into what I'm looking for the week ahead, I just want to go over that failed follow through setup. And usually in the room, I try to give examples of maybe a trade we had yesterday or last week, just so you can kind of see it setting up. So for this EFOI example that we went over in the room that I took, pretty clean trade, probably one of the cleanest that we've had. But I was showing everybody the failed follow through setup that caused me to take the trade. So you've got this nice consolidation. This thing starts to ramp up into prior resistance areas, and then it channels, and you got it kind of a push out, comes back, push out, comes back, push out, slams down, and at that point now it retests the lower end of the channel, and it continues to unwind throughout the day. So same sort of setup right here on EFOI, where you've got kind of a channel identified, and I think that if you literally draw on your charts and put these, it will help you. It's not about being perfect. It's about having an idea of what makes a good trade. And a lot of times, people just take a trade and they try to figure it out later. And this is a visual reminder of, hey, hands off. Don't be too aggressive into the lower end until it starts to prove itself. So EFOI, for me, I like to kind of be present into this strength. However, if I'm going to stop out at 70 cents or 72 cents, then I should not be there. I'm in too big, right? So what I want is to have a buffer over the top and a buffer on the bottom, depending if I'm long or short. I never want to just be taken out if it starts to break over this. I want to let it bust through, come back, and consolidate over that level. If it does, then I want to either get out or size down back to just a starter position. If it stays heavy, then I'd like to scale. You don't always get the scale, but I like to scale into that weakness after it confirms trend. Sometimes the bottom just drops out like EFOI and you don't really have a, technically, yes, I probably could have slammed in. However, if it held, it would come back up and I would have ruined my average. So this is just a nice failed follow through setup. This is something that I look for. It takes away all the guesswork of trying to find the top, because you never should. You should be letting it kind of form the top itself and show you its hand before you get too aggressive, because that's what's going to cause you a lot of issues. And, the sooner you get used to drawing these things on the chart, it'll also, let me just get back here. There we go. It'll also let you see it visually, and it'll help you stay out of situations like this hook. Pre-market, you can see this action. Now, sure, that's great. A lot of people are trading at pre-market, trying to figure it out. You could just wait. You could just wait for it to show its hand, because a lot of times you'll see this trap and then break out, or trap and fade off. And if you get too aggressive in between here, you're going to get chopped out. So the idea here is to prevent you from, trying to get in there, and then maybe stopping out at 180 when the entire time you knew that 180 was probably going to be the top. So same sort of concept, failed follow through momentum, let it exhaust, draw these channels. It will be a visual reminder when it starts to firm up and hold over those levels that you need to go ahead and cover. We had that on AA. We had a nice breakout here, nice big couple moves each day. And one of the levels that continually came up was 38.80. So you can come back and just kind of see, that it was starting to base at that level and started to break out. And then over here, it came back and held that same level. So if you're anticipating it fading on Friday and it comes back into that level and it ends up holding well, then it's probably not something you want to fight. And if you go all the way back, you can kind of see how that level was a key level coming into this whole entire earnings report. And then when it starts to base, you want to stay away. Otherwise, you're just going to get clipped like everybody else trying to find the top. So what can we take from this? You can see that we're starting to have a little bit of a top put in over here, right? So 41, say 60s, 41.80 range, 41.70. And you want to be cautious getting too aggressive, thinking that that's the top. If it blows out and starts to come back under, then I'm interested. Same thing with BAC, same thing with EFOI. I want it to be pushing over that top level because I know that over it is going to be covers that will eventually be, gone and out and no longer, trying to bid for it. It'll be longs buying the breakout, and, when and if it does turn, they're going to be looking for their exits. So anyway, that's just a quick scoop of, how I try to draw the channels. It doesn't have to be perfect. Yes, you can always change lines and all that kind of stuff. But what I do is I kind of focus on what is the current level that it's consolidating in, and what kind of information can I pull from that. And if I'm fighting over it, if the lines are under and you're short, that's sort of maybe a reminder that, hey, maybe I should size down. Maybe I should go back to either a starter or just get out, right? So just keep that in mind. If you are sizing into a trade and all your lines are below, that means that you're fighting. That means that your risk is higher, and it's not your typical risk to reward type of setup that's favorable to you. Therefore, you probably should not be in the trade. All right, let's move forward for the week ahead. So as always, I am not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. If you're not okay with that, shut the video off. If you're okay with that and you want to learn what makes me think a trade is good risk reward, what makes me think that it would present a good trading opportunity, then you're in the right spot. My goal is just to kind of put ideas in front of you. I'm not here to tell you to buy or sell. Neither should you be looking for that. You should not, as somebody that's trying to learn how to trade, you should never be looking for somebody to tell you what to buy or sell, because the second that they no longer do that, where are you at, right? You've got nothing. So you should be kind of reverse engineering the charts, the plays, the concepts, the discussions. Find out what it is that makes these great trades and, pursue that. Let's get right into it. So back, BAC came up nicely, nice reversal day. Obviously the market did too. This one will stay on radar for a couple more days anyway. You guys see how I start to cycle through different plays. So, in the prior weeks, it was NEO and AMD. Those were great trades, great volume, great, range. And then I went to RBLX, which had some outlier range for a couple days. And I went to BAC for a couple days because it had outlier range. It started to have this straight up. So I want to take advantage of this day. It doesn't mean that I'm short biased and it's going back down to the lows. What it means is that it's entering some sort of profit taking zone where people have been waiting to take profit. The first sign that it shows that it's going to be weak or that it's failing, they probably lock in. I want to take advantage of that and then move on. I don't want to marry it, because then you end up in a situation like this where maybe you end up overstaying and you get squeezed out. But if you did get squeezed out on this thing, I think, to me, you were probably a little bit stubborn. And what's interesting is if you go back through those lines that I drew, right, from the prior day, it actually, looking left, it would have presented a nice trading opportunity right here. Comes back in. VWAP confirms all these dips are holding over VWAP. So if you're fighting at that point, obviously, that is avoidable. You can see it's all higher lows over here. And then it starts to break higher. That lower end of the channel starts to become a new base, and it breaks through that top end of the channel, which is from the prior days, which is the concept of looking left. Same deal happened with BHVN as far as looking left, just to review that real quick. And that was one thing that I put on Twitter. So if you go back through and look at these days, you can see, and granted Friday busted through there at the high, but you can see that right over here, this prior top ended up being the prior top right over here this day. And then it started to fade off from there. So it's not always going to be the case. It doesn't always just, hold that level. But on the first test of it, there's a good chance that a lot of times it's going to fail. And then if it starts to consolidate and come back, just like you saw on BAC, it can power through. So typically the first test is usually a high edge type of trade, especially if there's an exchange, comes back, consolidates, and then it figures out, all right, are we going to stay heavy from here, or are we going to start to build and build and build and build and then blow through the prior highs? And that's exactly what you saw happen with BAC and BHVN. So anyway, BAC, standard, higher the better, reactive trade. If it gaps up huge and pushes, I'm interested in fading, as soon as it starts to fail. Otherwise, I'm not sure if I'd long it, but I don't have a problem longing it at these levels if it wants to produce higher lows and hold trend versus VWAP. So the key is 9:45, 10 a.m. plus, right? So one of the biggest things, especially on something like AA that I see people doing, is they form a bias between 9:30 a.m. or even pre-market and 9:45 a.m. If you always maybe even set yourself a reminder, hey, it's 9:45. Are you fighting something? If you are, size out. Because a lot of times in the past, it's from 9:45 a.m. until 4 p.m. I'd stay in a name that I don't even care about, that doesn't even have an edge. But just because it's not really doing anything, it's not really doing sideways, trades should be working for you. And if they're not working for you, then you should be out of the trade. Otherwise, it's just, it's dead money. It's taking your focus. The trade should be working in your favor. If it's not, look for the next trade. Ape. This is, you have to remember where this came from, right? So it's an offspring of AMC. So we don't want to get in a situation where we think it's rallied too much, it's gone too far, it's pushed too much, it can't go too much higher, how can it keep going? All those things that everybody does as a short seller, thinking that this doesn't make sense and it has to pull back. And then all of a sudden it swipes up 50 cents, you get blown out, and then you miss the trade, right? So this was a long idea. I was one day too early on the idea. I got there both days, and I cannot say that I held it at all. I totally fumbled this idea. I put it on scan. We talked about it last week. We talked about it all week. But, sometimes, you can call them, but you can't trade them. And this was one of those cases where, unfortunately, I fumbled this trade. Either way, nice rally so far. And this was a great example of, we've got that nice big move, gap up, push off the open, and then it fades down. So when that happens, you don't want to fight after it reclaims this VWAP level, right? So you can be as bearish as you want, which I was. I was looking for that push, that big exchange, and then that fail. I got in there, I got short, and it was a nice fade off. And just like I posted in the room, the chart, you could see that I was covering it. And each time that it was flushing, I was covering it because it was starting to consolidate around VWAP. So you've got all these chances that proves that it's holding over VWAP. So if you got blown out into the close, and that's on you, that's you being stubborn. But tomorrow, same deal. The next day, same deal. I want to see a gap up, parabolic move, failed follow through. If it holds trend, I don't want to fight it with size. That's when you get in trouble. and knowing that it's an offspring from AMC, that's when those swipes come and, you know, the headaches arrive. So if you know that you are not good at moving on from a trade after being up on it, then maybe just wait until it breaks key levels. Start drawing lines and remind yourself, set price alerts to alert you when it comes in. T is just like BAC. So, you know, I'm going to be monitoring this. This actually was a fantastic trade right here. I did not trade it, but the reason is the same sort of thought process as BAC, right? It started to come on my radar once it has steady momentum without any correction. So same deal here. T, hopefully it continues to go. Steady momentum, up, 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 some sort of blow off, and then the opportunity that I want to take advantage of. So that's the main watches for me. I have not been coming to the market with too many main watches. I've been more, you know, kind of focused on, you know, what's happening at 7 a.m., 8 a.m., and how does that relate to open? And then taking the top 2 or 3 from those movers. But failed follow through, CYTO. You guys should know exactly what I'm looking for here. I'd be looking for the EFOI setup. So, you know, I'd like to see another nice push over into this range, and you can see, once again, a nice EFOI setup right over here, and the BAC setup that we talked about, the failed follow through momentum into the close. You know, the fact that it faded into the close, you know, that it definitely is weak, but we've been seeing these gap up the next days, especially 4 or 5 a.m.s. We've seen it on, I think, 3 or 4 different names already. I'm not getting up that early, but, you know, it's worth it if you are up, you know, to kind of take a peek, especially if it's at 60 or 65 or 70, because by the time it's, you know, 7 a.m., 8 a.m., they've been, you know, fading all the way back. So keep an eye on that one. But these have just been fantastic opportunities lately. FNHC was a big one, obviously, and you know, that's been paving the way every single day. HLBZ was a really nice one. Minimize that one. I had some pretty decent size of 57, but, you know, what can you do? ZVO, same deal, nice one into the 30s. And then obviously AGFY, which you guys are, you know came way in after the reverse split. So this was actually, you know, 50, 60, 70 cents going up to about $1, $1.50, $2 basically pre-split, and then just absolutely came down. So I figure they probably raise soon. Otherwise, you know, it's acting extremely thick. So it'll be interesting to see how this plays out. But point is that we've got a cycle right now. We've had a cycle of sub-dollar names that are running like crazy. You don't want to step in front of them. But when things start to get a little bit out of hand and they're very, very thick names, then there's big opportunity. And you saw that with MULN. We had some great opportunities with that as well the last couple days. And 38 continues to be the big key. And 36 has been a nice, you know, kind of support level. They do let it dip under there, but those have been covers for me each time. But, you know, generally I look for the area in which most of the action is happening. Not the bottom, not the top, but the majority of action. So anyway, Mullen, hopefully, in an ideal world, you got, you know, everybody pushing it over the weekend. Oh, we're going to the moon, blah, blah, blah. Ideally, it opens up over 42 cents, blows off, and then, you know, fades the rest of the way. Keep in mind, it's traded about 1 billion shares, a little bit over 3 days. So that's notable. The only thing that's notable about that is that it might take a few more days to come in, right? So there's a very high probability that it ends up back down to 20 cents and lower within, you know, a week or two, a couple weeks. But the fact that it has so much volume, it just kind of kicks the can down the road a little bit. It takes a little bit longer. RLMD is one that we've been focused on. This was a big tanker, and then it had a nice rally. And so it's been kind of on watch for price alerts to alert you to join the fade to the backside, and so we are there. Ideally, we get a little push, you know, just a quick kind of look. Ideally, we get maybe into the 730s and then starts to fade back from there. And the only reason I picked that level is just it had a trouble here, and I don't try to make this too difficult. Going back, you can kind of see that was an area of interest. So if 730s were to reclaim, that means that general area is sort of an area of interest for a buyer. So I don't want to screw with that. I want to make sure that 730s continues to fail, to be comfortable fading the trend. Cabo was a nice one on Friday. It's still a little bit crowded, in my opinion. It's got SSR on, had a nice fade, was pretty good trade. I ended up covering it into the close. The last 5 minutes I worked out of it. But I had a good entry. Well, I put some on early, and I put some more on, and I was off desk. But it faded nicely, and it was definitely a good trade here. But 20 cents back up, I was pretty much back to break even, and then it came in, so I ended up covering it. So I think it's just going through that process of everybody's short, everybody's doing the same thing, and then once everybody kind of gives up and covers and says, the hell with it, I'm done with it, that's when I want to start the focus. So keep an eye on that one. Last couple, so this is under the continuation side. MVST was an idea for potential long on Thursday night scan, and the reason for that, liquidity trap type setup, should look familiar. Looking for dips, looking for it to confirm that it wants to hold this 220 level and then break out T+2 from there. And so far so good. Again, I would not be forcing the long thesis. Just if it continues to behave, great. If it stops behaving, then you need to adjust from there. A couple other pump types, HUDI, huge breakout. I actually traded this one. I got back towards the end of the day, and I just traded a little bit into these little pops. Not one to screw around with if you're new. This is the type that could go circuit to circuit into the hundreds. It's very thin. They've held it for a very, very long time. In my opinion, they were baiting shorts for weeks here. So this is just making them pay. There's a good chance that the entire float is probably held. We know how these things work. TC, we've talked about this for a couple weeks now. This was also a pump from like the Telegram and the WhatsApp and all that kind of stuff. So the reality is some of them go crazy and some of them just tank. And so you have to wait as a trader to, what the targets are, what the tickers are, but you need to wait for the price action to prove that, yep, it looks like they're done. It looks like they're, it's over. And even with that, take something like Top. If you were hammering in, you probably got squeezed out. And then, it finally came in and it offered a fantastic opportunity. But it's really about behaving on the front side, waiting for it to prove. Otherwise, you get it caught up in the front side of, something like Top or ILAG or whatever. So it's good to know your targets. It's good to know, LGHL and IMTE and DOGZ and CLEU and all those names that we've gone over a million times. But you just have to kind of wait for the volume day to kind of show its hand. So I never will long those ones. I'm not interested in going long Huddy. I'm not interested in going long TC, even though TC has tripled since I put it on radar for potential liquidation type day. It's annoying to watch it triple, but it is what it is. Other than that, XPEV, I want to stay familiar. When I say XPEV, I mean LI, I mean NEO, I mean potentially even Rivian, and I even mean LCID. Mainly, if I'm interested in XPEV, it's going to be LI and NEO. But this interests me straight down. The day that it bounces, it's going to be 30, 40%. I just want to be there for it. The day that's going to go up 70, 80 cents, it's going to pull back, and then it's going to shoot up another $1. That's the day that I want to trade it, because you can trade, for me, personally, I can size it. I can trust that move. And the only thing is, if you're trying to find bottom and you hold through earnings and it opens at 5, where are you at? You missed the trade. So I really want to be cautious trying to find the bottom or think that it has to bounce, because it doesn't. We know that. It could go 6, 5, 4, 3. It could go anywhere. But the day that it has a trend, that it's firming up, that it's holding well, that's the day that I want to focus on this, LI, NEO, potentially LCID, and RIVN. And last but not least, AEHR should look familiar. This was a long idea for a couple weeks now since earnings, and they had a lot of big candles. We gapped up and, steady so far. So, I'm not sure how much I like it at this level, But so far, that one's been working extremely well if you participated. Other than that, I've got a couple others staying familiar, Snap, THC, big movers, things like that. It's always good just to see, the names. It's, something like AA, which is, really moving well. It's good to kind of look at other sector type names and realize that, hey, it doesn't matter necessarily what you think on AA. If all of these are suggesting that it's nearing breakout, it looks good, it's going to bounce, then AA will probably stay strong. But that's it. That's what I've got for the week ahead. I hope you guys have a good rest of your weekend. I just realized that I forgot to put the winner for today, so let me just do that real quick. Let's do Sony Digital 1 and Laptop Legend. Laptop Legend had a great video. It's not fun to make those videos. It reminded me of when I lost Kodak, and a lot of people give him crap for being so reckless. But the reality is he took some crazy risk on certain things, and he made some really good money. That's maybe risk that other people don't want to take, and unfortunately, sometimes when you get a little bit loose with risk management, or you kind of get into that freeze moment, everybody's going to do it no matter what level you're at. So to, tell him he's careless and he's, done silly stuff, and yeah, sure, maybe it was an aggressive trade. But there's only one way to learn, and every single trader that I have known that has become great has a moment like that. So just keep that in mind. I said that last week. I'll say it again. I love when people give people crap for terrible risk management on this, 1 out of a million type of trade for them. Something where they let their guard down, and something where they've done something that they typically don't do. But it's that one moment that whips you in the butt and says, "Hey, you need risk management." Always. There is no, let's see what it does. There is no, we'll see if it, works this time. It's always risk management. Always have your max stop on, and it will help you in your trading career. All right. See you guys tomorrow.